Welcome and welcome back. Campbell's reported earnings this morning. The results were not good. If you had watched prior videos from me on Campbell's, you may know already that I said I am a shareholder, but I thought that this stock might go lower, and that is exactly what has happened. We're going to take a look at the quarter. Thought we'd go through the investor presentation. I'll give you some of my thoughts on the company, and I'll also tell you what I'm going to do with my shares from here, or what at least I'm thinking at this time. So if we look, it didn't start out well when they say quarter two performance below our expectations amid continued dynamic operating environment. Not a good way to start an investor presentation. The second bullet here, Meals and Beverages strength continues to anchor brand portfolio. That really foreshadows the fact that snacks was probably the biggest problem, or was the biggest problem in this quarter. They say they're accelerating cost savings to try to support margins and reinvestment. Hopefully, they are able to do that. They have paid back some debt, which is good. Not a ton, but they're working on it. That is one of the biggest problems right now. Is they are leveraged, especially after some of their acquisitions they've done in past years, and they updated their guidance. Essentially, they cut their guidance because of how poorly snacks performed. So if we look at the results here, dollar consumption was flat. Organic net sales were down 3%. Net sales were down 5%. Adjusted EBIT was down 24%. Adjusted earnings per share were 51 cents. You know, the brands here, this is a big reason why I hold the stock. I think these brands are strong if they can execute properly. And I think management is aware of some problems. They talked in the call about pricing and promotions. It seems like they are aware of some issues here that they need to address. So hopefully they can actually do that, because I do believe brands like Rayo's, Goldfish, these are strong brands that should be able to do well over the long term. The brand portfolio is still one of the bright spots despite the recent struggles of the company. Healthy in market growth during quarter two. Shipment delays created temporary net sales headwind. All right. So in meals and beverages, organic net sales down 2%, or volume mix down 2%. Dollar consumption was positive 2%. Volumes down, dollar consumption is up. They had some price increases. So steady soup consumption amid cooking tailwind. They are trying to say this is a tailwind for them, and they're actually launching a new product line here, condensed sauces. So it's typical for people to use like cream of mushroom soup and cream of chicken soup as ingredients in their cooking. So they're launching these condensed sauces to try to provide people with more options to use the Campbell's brand in cooking. I actually really like this idea that they're trying to get more into this market of giving people easy solutions to cook at home. And so I think this could potentially be really good. I'm hoping to see when this launches. I think he said on the call this was launching in June. I'm really interested to see how this does. I do like the product innovation here. This is one of the silver linings from this entire thing that I saw. And this was another one. So the Rayo's brand surpassed $1 billion in net sales. This is a brand that people really like. People pay a lot for this product. And so I I do see this as one of the reasons to continue to hold the stock, despite the fact that acquiring Sovos Brands made it so that they had to take on more debt. The Rios brand, I see as a really good brand for them. Hopefully, in the future, that people who want more quality products, more quality um, pasta sauces and things like that, as opposed to maybe buying Prego, which is also a Campbell's brand. Maybe they look to Rayo's, and I like that they're expanding it into other things, soups, pizzas, things like that as well. Snacks, here's the element that really hurt their earnings. So organic net sales in snacks was down 6%, volume mix down 6%, dollar consumption down 3%. So again, some price increases must have tried to offset some of that volume decline, but on the call they talked about promotions, and there was some talk about pricing. So I think you might see some more sales, coupons, promotions with some of these brands to try to get that volume number back up into the future because it's -6%. It's just really not good. They do see Goldfish as a really strong brand for them. I agree. This is one of the reasons to really hold the stock. It's just very, very strong brand. Milano cookies have done well recently. I think maybe people they might be eating fewer chips, but they're still going for things like cookies if they want a little bit of dessert. People might be doing things like taking GLP-1s and wanting to lose weight and things like that. And so they're snacking less on potato chips, but they still might, have a cookie or two after dinner or something like that. So I do think, that that's a brand that could see some strength and hopefully going forward. Here they talk some about their salty snacks portfolio. So all in all, not a great quarter at all. The snacks portfolio really struggled. Bright spots are Rayo's, and I think the new condensed sauces line that they're putting out and trying to get behind that, the at-home cooking, make some easy options for people to cook at home. So those are some of the positives, I think. They are trying to reduce costs. I just saw an article yesterday about them doing some layoffs at one of their plants. Is not really good if it means, they're having to cut positions because of volume declines. But one of the keys with this is they've got to get their margins improved. We'll see if they're able to do that. On the weekly chart, you're right up against the S1 support. This thing's below moving averages. So we're looking at pivot supports here to try to figure out where this thing might find a bottom. I was kind of hoping that this earnings report would be it, and that is not the case. I saw bullish divergence on the weekly chart before this earnings report. You still really can see there might still be a little bit of that there. If you look and we were to draw a trend line, it looks like your RSI still might be showing a little bit of bullish divergence, but um you've got that increase there along with at the same time price declining. But there's not a lot to be bullish on here unless the market decides that these struggles they're seeing are the bottom and that they're going to improve from this point forward. Like I said, the brands are strong. They didn't cut the dividend. The dividend yields over 6% here. They did talk about on the call the need to, I'm paraphrasing really, but be careful with cash flows. And they said the dividend's important to them, but they don't plan on offsetting even share dilution um, in the near term. So, or at least that's what it sounded like to me. So you go check the call out and the transcript out. But basically, they're going to be protecting the dividend, I think, for now. But they are saying they're going to have to be careful about how they use their cash flows, and they're going to have to look for they're going to have to be careful with their capital allocation. So we'll see. Brands are strong. I like some of the product innovation. I like the Rayo's brand here still. Maybe it'll find support here and the market will start to price an improvement from here. The thing is really been destroyed here. I mean, it was trading at over 56, actually traded over $57 for a bit back in December of 2022. So it's been tough for Campbell's. My average is a little under $30. I have shares in one of my accounts that are a little under $29 average, and then shares in another account that are a little over a $29 average. I'm just going to hold them, I think, as a part of my portfolio, collect that dividend and keep an eye on it. I might change my mind and decide to, if I see something that I think is less uncertain, has less uncertainty around it, has less debt, less leverage. I'm already thinking about some other things, but for now, I do still like the brands. I do think that they have the opportunity to improve. So right now, I don't think I'm gonna sell it. But I'm gonna continue to mull over what I want to do with this one. So it was a little bit off the cuff in this video, but I hope you found it helpful or informative. If you did, click the like button, subscribe, click the bell to get notifications, follow me on X at Stock Sale Flyer. Really appreciate it. Thanks as always. Bye.